Welcome to the Capital News, everybody. In economic news for February the 11th, 2019, let me start off with the U.S. markets and what was another whipsaw day for most of the major indices. While the S&P 500 closed up ahead 2 points, it whipsawed back and forth about 15 points throughout the day. Dow Jones Industrial Average closed down 53 points, but whipsawed 200 points. The Nasdaq closed up 10 points, but whipsawed about 50 points throughout the day's trading. And the Russell 2000, the small cap index, closed up 13 points, but was pretty much up all day. Now, this is a continuation of the new normal that I think we're in and are going to be in for a little while forward until we get a little bit more confirmation on a couple things that are still outstanding. The 800-pound gorilla in the room for the time being remains the U.S. trade war with China. We are nearing the March 1st deadline as to what's going to take place. Now, we had, again, some more breadcrumbs, some more rumors being dropped and floated out there that the talks are on, they're continuing, something will get done. Nothing perfect, but maybe President Trump is moving in the direction, let's just get a deal done. Let's just get a deal done. Doesn't matter what it is, good, bad, indifferent. Let's just get something done. We can show there's at least some sort of progress, and we can continue forward. Now, I've had this discussion with you guys before that this is sort of the quintessential buy the rumor, sell the fact. Anytime we get some further news that these talks are continuing in some sort of direction, the market rallies. Okay, and we had some movement last Friday based off of that, despite Larry Kudlow's other comments. He's the White House chief economic advisor to the president, saying the talks are continuing, they're going on, but we're still miles and miles away. Which was the same thing that Commerce Secretary Wilbur Ross said. We're still miles and miles away. I don't want the president to make a deal just to make a deal. That's a rumor. I don't know if that's true or not. That's speculation that that's where he stands. The way that he's maneuvered on so many other things, I don't think that the president is going to make a deal just to make a deal. I really don't. I think we have China in a position where we have greater leverage. Now, don't get me wrong either, because I've said this previously. While we do a lot of business with China and vice versa, China is not our biggest trading partner. Our biggest trading partners are Canada and Mexico. But there's a lot of stuff that's going on with China, and the reason that we are so interested in China, really, of course, it pertains to trade, but it's much more than that. China is a very strategic country, I should say, as are pretty much every other country out there, if they have their act together to some small degree. They're being strategic in how they move their people around the world, how they move their corporations around the world to develop other countries, particularly those in Africa, for natural minerals and the commodities that are in great abundance, and in other places around the world for the same reason. The United States does the same thing. Look at how many countries we are in for their natural resources. How many countries are we in the Middle East? It's probably a shorter list of the countries we're not in the Middle East, to be honest with you, right? So this back and forth as far as this international strategic chess game isn't to be a surprise to anybody, or at least it shouldn't be. Because what you have here are two countries, the United States of America being the largest economy in the world, and really the only superpower in the world at this time, versus a supposed up-and-coming star in China, which is the second largest economy in the world. Do they want to be first? Is there enough room for two superpowers? What are the rules? What's the groundwork? Because the type of warfare that exists within the 21st century, when it comes to developed nations or nations of this size, it's going to be much more on the economic fronts. It's going to be much more on the cyber warfare fronts. And once artificial intelligence take hold, that's really going to be the battlefield. And it's my understanding that President Trump just recently signed an executive order that dealt with that becoming a national priority for the military and research departments within the government to really start developing artificial intelligence. And I'm probably going to do a whole, there's enough information on that alone to do a series on artificial intelligence. And I am by no far a foremost scholar on artificial intelligence. I am not a futurist. I am not a philosopher on this stuff, but from an economic standpoint, I can speak to it and what's coming. And I hope to have those conversations because they're very fascinating. But I don't want to get off topic. So we have the U.S. and China trade war, but it's very much more than that. And what's moving these markets is the hope that something solid comes out of these talks. Now the question becomes, how much are the markets going to move if something good comes of these trade talks, right? Because if it's buy the rumor, sell the fact, which we already know is the case, and in previous podcasts, I attributed probably these breadcrumbs and these headlines that had to deal with trade talks probably accumulates to about 1,000 points of this rally, if not more. The market is looking for some type of good news because there's not a lot of good news in the U.S. economy. There's most definitely not a lot of good news anywhere else around the world. Spin a globe, stop your finger, probably bad. We know that Italy is in recession. From the looks of the most recent data, we know Germany is probably headed that way over the next few quarters of 2019. I'm going to get into Brexit a little bit later. We know China is slowing down, and I think a lot more than what they're willing to say to everybody. But they're kind of showing their hands with we're going to open up the country, we're going to open up the economy, we're going to liberalize it a little bit. We're going to double the amount of foreign direct investment we need. What's that signaling to me, anyways, is the government doesn't have enough resources to get what's coming under control. The money printing that they've embarked on for the past decade has really put a lot of other countries to shame, and I rail against the United States and other central banks every day. But what the Chinese have done to their economy to make it look a lot bigger and better than what it really is really comes down to they're a paper tiger. It's smoke and mirrors. Just like everywhere else. They don't have the magic formula, believe me. A bunch of communists do not have the magic formula. What they have, because they are communist, is the ability to move a little faster than a country that is represented and governed by its people. They want to go take something over that, boom, they go do it. No hesitation. We don't like doing that in this country. At least we shouldn't. So there's serious discussion back and forth. Some of that time can allow other things to creep up. But that's short-term logic. That's not long-term logic. Okay, a lot of people thought 30 years ago Japan was going to be a powerhouse and was going to overtake the United States. Well, look at them. They've been a zombie economy for 30 years. Their stock markets have not recovered to the points of that bubble that ultimately burst. China is no exception. Have they defied some of the laws of economic gravity? Sure. How much longer? Probably not much longer. Everything comes home to roost. So from a negotiating standpoint, I think the president in the United States has some leverage on this front. So, everybody wants to pat the Chinese on the back and say, you guys are really smart. Well, if they're so smart, then why do they need to steal the IP and the trade secrets of U.S. companies? I mean, right? If they're so smart, shouldn't we be trying to steal their trade secrets or want to understand what they're doing? But that's not how it works, is it? No, 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 no. It's the Chinese saying, well, you want to come in here and do business with us? We're going to get a piece of the action, and we're going to get an understanding of how you operate. What are your operations? We're curious about that intellectual property. How did you guys come up with this? I mean, that's just fascinating. I mean, it can't have it both ways. They can't be super geniuses and then ask a whole bunch of other companies, how do you do it? Now, what makes them smart is the fact that they asked the question. And this goes to President Trump's argument. No other president has stepped up and said, no, 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 look, you guys want to grow. The United States is here to help spread free market capitalism. We would love to spread American innovation and entrepreneurship around the world, including China. But if you want us to come in, we're going to run our companies the way we run our companies. You're not going to run them. And you're not going to steal our intellectual property or operational process or anything of the like. Just not going to happen. No president seemingly had the cojones to stand up to China and say, knock this off. Now the question is, how much information do they already have? This was very akin to Japan. They weren't the most innovative either, despite what you hear. That's American innovation. What the Japanese and what the Chinese are very good at doing is once they have an innovation or a creation in front of them, they can deconstruct it, reverse engineer it, figure out how it works, and then build something new and something that may very well be better. But coming up with that first initial innovation, that new process, is very much American. And I've gotten into many debates and arguments with people over this. I said, man, oh, come on, they're going to take us over. It's just a matter of time, this, that, and the other. There's 1.3, 1.4 billion people. They're so smart, yada, yada, yada. And I said, no, get out of here. To the same argument, if they were so smart, where the hell have they been for the past 200 years? Where have they been? These are simple questions. If they're so smart, if they're such great international strategic chess players, if they have such sound political and socioeconomic policies, where the hell have they been for the last 200 years? Well, under Chairman Mao, we know where they've been. They were killing each other. Let them eat less, and then they starved. Tens of millions dead, gone. The Chinese just want to adopt whatever works and then just call it communism because that's their party, that's their politics. Given the amount of debt that exists within that country, I sincerely think that a day of reckoning is upon them, as it is all of us. That gives the president a little bit of leverage, if it happens to be true. And I think both sides are trying to prop up their respective economies and markets for the time being, at least until these negotiations, this 90-day period is run out. You had President Trump telling the Federal Reserve, keep that funny money going, keep the markets pumped up. He said, buy the dip. Market rallied 1,000 points. Buy the dip. You had him have his Secretary of the Treasury, Secretary Mnuchin, meet with some of the largest banks in the U.S. following bear market territory in the U.S. stock markets. What did they call themselves? They called themselves the Plunge Protection Team. The plunge protection team. The plunge being the root for the word plunger, which is used for the toilet, because that's where our economy is headed. Okay? It's just a matter of time. This is a facade. This is a game. This is a war. What happens in war? Who is the first casualty in every war? The truth. The truth is the first casualty of every and any war. China wants to roll out more of their central bank stimulus, more. They want to do huge round of tax cuts. They want to open their markets, double the amount of foreign direct investment. They're trying to keep their market propped up. The U.S. is trying to keep its markets propped up. Why? Because we were in a trade war. And if the U.S. markets kept falling, well, then the Chinese negotiators could say, look, these tariffs aren't good business. Now they hold all the leverage. Likewise, if the Chinese markets were collapsing and continuing to collapse, the U.S. would come and say, hey, not too good, huh? Maybe we should take these tariffs off. But in order to do that, you're going to have to stop messing with our companies. See where I'm going with this? This is a trade war. There's propaganda, and economics is the tool. It's not guns and bullets. It's not RPGs and missiles. It's economics. That's why you have people get on TV, talk about these markets, people very highly regarded and respected, saying they've never seen anything like it before. I've never seen anything like this before. These type of gyrations, these type of volatility, this type of nonsense. Well, when you look at it from the standpoint, well, we're in a trade war, it starts to make a little bit more sense. So what's going to happen at the end of the day? You really have a couple options. We have a few weeks left, right? And in the interim, you're going to have President Trump meeting for the second time with North Korean Chairman Kim Jong-un over in Vietnam. What will come of that? Hopefully some more peace talks. The president does not get enough credit in the mainstream media for actually having conversations with this man and not going to war. I applaud him. My hat's off to the president. Everybody thought the first thing Trump was going to do was start pushing buttons. Not even close, quite the contrary. Which is another political savvy move for him, because now he's got all these liberals boxed in. They're supposed to be the bring our troops home, this, that, and the other, no more wars. Well, the man is trying to bring troops home from around the world, trying to negotiate peace and prosperity with a lot of countries, and he gets demonized. Again, Trump derangement syndrome. I'm telling you, it's a real thing. So how does this thing with China end? Well, we can imagine if there isn't a deal by March 1st, that the markets will probably sell off. How much, I'm not going to guess. But they'll probably sell off. The next question, logical question, would be, well, are new tariffs going to be added on to what already exists from the U.S. side and from the Chinese side on American goods? Or would they say, okay, well, 90 days wasn't enough time. We're going to keep things as they were, but we're going to do an extension. Do they come to an agreement? If they come to an agreement, is it a win-win? Can it be a win-win? Because what would a win-win look like? And even if China should agree to buy more U.S. goods and services, they're probably going to have to do so at the expense of another country. So now you have the implications and the interconnectedness of all of that. What other country is now not going to have as many goods and services sold to China? Is that going to slow down another part of the world a little bit further? Now, of course, that's not a huge issue probably for Trump and the administration. You're looking for an American first agenda. I get that. America first, you want to sell more agricultural goods. more soybeans and that type of stuff, get a greater share of that market. I get that. But what about everything else? We talking commodities, manufactured goods? Is it all agricultural? I mean, the Chinese can say whatever they want. It's the action that you got to look at. I mean, just look at Apple. Their iPhone sales are way down in China. Now, a lot of that may very well be doing Apple's fault because they price themselves out of the market. Allows for competition, and the competitors steal market share. I mean, that's how it's supposed to work. But what are the Chinese going to do? We say, well, we're going to promise to buy an additional 10 million iPhones. It really doesn't work that way. I mean, I guess in theory it could because they're communists. They could just buy them. But it's the people. They either want the phone or they don't. So all of these details are very important. But we tend to have a president who comes out and just says it's beautiful, it's the best thing ever. Well, those aren't details. It's very showman-like, it's very showy, it's a salesman's gimmick. Okay. But we have real issues here. What about the IP stuff? Because that's the meat and potatoes. The Chinese can promise to buy everything under the sun. What's the action? That's what we have to watch. And we're going to continue to watch it closely because it's going to have huge implications. Because if the U.S. wins, that would mean the Chinese lose, right? If that's how it's going to be. If you have a win-win situation, then you can say, okay, President Trump can come out and say, we won some stuff. President Xi can come out in China and say, we won some stuff. And we move forward from here. Or one side wins the war. Well, if the U.S. wins the war, that would mean that Chinese lose the war. Well, one would have to assume if the Chinese lost the war, that would not be a good thing for their economy, right? Because the argument is that China is just beating us every which way but loose here in America. They're just taking advantage of us. So they have the economic leg up. If we're told that one of the main risks going forward for the global economy is a slowdown in China, if China loses a war that has to deal primarily with economics, doesn't that mean that their economy is going to be that much worse? So wouldn't that fuel the flames of slower economic global growth? So if the U.S. wins the trade war, is it really a win for the global economy, at least in the short term? That might be fantastic in the long term, but in the short run, what are we looking at? And if the Chinese declare victory and we have to declare defeat, well, that's just probably not going to be a good situation from a headline news standpoint in this country. There's a lot of unknowns. We'll know a little bit more, obviously, within a couple weeks, because in a couple weeks it's the deadline. Now, in some other news as we continue around the globe, obviously, just to touch on Brexit, Theresa May, Prime Minister of the UK, is supposed to have a speech, have a discussion with Parliament and the British people about her discussions in Brussels with her European Union counterparts. Nothing came of it. So she is looking to buy as much time as possible because her deadline is March 29th. There'll either be a deal and they can exit the European Union in some sort of orderly fashion, or it's a no deal and then nobody knows what will happen. And of course the doomsayers will say it'll be terrible economically. The uncertainty alone will cause recession. Is that hyperbole, or is there some truth in that? I mean, obviously time will tell. We'll know a lot more over the next couple of weeks, but I can imagine that Theresa May is going to be flying back and forth between London and Brussels a few more times over the next few weeks. And then you have the UK Parliament, which would still have to agree to a deal. It was struck down. The original deal was struck down. That's why she has to go back and fight for another deal. What's the European Union going to say? We're going to start all over with you, or we're going to play hardball? Because I told you before, the European Union does not want the British economy to do well. Because if the British economy does well and they leave the European Union, then everybody else is going to start scratching their head and say, hey, wait a minute, we give up our sovereignty, we give up all this money to a bunch of bureaucrats in Brussels. UK was doing that, now they left, and now they're just doing fine. So there's a lot of dirty politics going on here. Don't kid yourself. Now, in some other news, we obviously talk about the Federal Reserve quite a lot here. The Federal Reserve has done a 180. They were much more hawkish at the end of last year, much more dovish now. That dove has flown around the world at warp speed because other central banks are all turning dovish as well. Even some emerging markets such as India, which cut their rates last week. That may be for political reasons, again, despite the quote-unquote independence that's supposed to exist within central banks and governments. Nevertheless, they cut. Reserve Bank of Australia cut their forecasts. Bank of England cut their forecasts. I spoke earlier about the economic situation in Italy and Germany. We continue, I think for the 13th weekend in a row, you have the yellow vests protesting throughout France. You also have some protests in Spain, but I think that has much more to do with succession of some other land in Spain. But that could brew up to be something bigger too. Point of the matter is there's a lot of political uncertainty and there's a lot of economic uncertainty. And when you have central banks the world over starting to become more dovish following the lead of the Federal Reserve, you now start to have a little bit more of that decoupling I've been mentioning in the economy. Now, one would have imagined that following the Federal Reserve's 180, the U.S. dollar would take a hit. And shortly, once there were sort of headlines that they were going to start becoming more dovish, that's what started to happen. There was weakness in the dollar. Gold started to rally a little bit. Silver started to rally a little bit. Over $1,300 an ounce on gold. Near $16 an ounce on silver. But now, since that dove, that central bank dove has flown all around the world and dropped its droppings all over the place, you now start to see a stronger U.S. dollar. The dollar has rallied, I think I heard, for 8 straight trading sessions, which is one of the longest streaks in 3 years. Think about that for a second, especially those of you who pay attention to the currency markets. That's quite the rally. And that's not just against some emerging markets. That's against the majors. That's against the euro. That's against the pound. That's against the Aussie. That's against the yen. That's against the Canadian dollar. It's rallying against the whole basket, basically. And likewise, you started to see a return in a flight to safety at the end of last week, where you started to see U.S. Treasuries really start to catch a bid, which turned down the yield. So we're at yields at 2.5% and below on some key treasuries, which is a disconnect between the bond market and the stock market. Again, the adults versus the crack addicts in the stock market. You look at bonds as a safe haven. So there's a flight to safety. bids up the price of the bond, knocks down the yield of the bond. But at the same time, you see some stock markets rallying. Well, stock markets are supposed to be risky assets. How can you sort of have both rally at the same time? Who's right, who's wrong? That's what's coming. That's what's coming. That's that day of reckoning. But we're at war. Don't forget that. We're at war. We're in a trade war for at least another few weeks. So I anticipate a lot of this volatility, a lot of this whipsawing back and forth to continue. It's going to be headline driven. There's not a lot of good news on the economic front coming out of China or Japan or Australia or Canada or much of the Eurozone. We'll see what Prime Minister May says in regards to Brexit. And we'll see what other economic data starts to drip out of the U.S. because recall, the government shutdown caused a delay in a lot of economic data, including Q4 GDP, which I think comes out at the end of February. So we'll stay tuned for that. But that's the economic news for the day. Of course, there was a lot more, but we can only cover so much in a half hour. But thanks for joining me, everybody. This is the Capital News. I'm Alex Karitis. Godspeed.